Good afternoon, everyone.
Good afternoon, sir.
Good afternoon, Trisha. How are you?
I'm good, sir. How are you?
All well. And Garvit, how are you?
I'm good, sir. What about you?
All well. Cool. So, guys, I welcome you all to this rapid revision batch. Now, I'll just lay down a couple of pointers that I have planned for this. So, the structure is going to be very simple. There are certain topics in your SBR syllabus which have the highest possibility of getting tested. Consolidation, financial instruments, sustainability, revenue, leases, employee benefits, share-based payments. There's an entire list of standards that are super critical for the exam. So what we are going to do right now is we are going to uh, revise each day. We'll be revising a specific topic. Now, how exactly will the revision go? So, I don't know how many, quite a few amongst you have studied with me in the past. So, whatever was covered in the batch, okay, whatever was covered in the SBR batch, उसका एक summarized form है that I have put together in a PPT. Same notes है, just थोड़ा सा modified to look prettier in a PPT. So that is one part. And the second part is what I have done. I have gone through the entire exam kit and I have identified specific questions. So, for example, today we are doing financial instruments. When a financial instruments के जितने भी questions है, I have identified all of them. And so in a 25 marker, the financial instruments part is say maybe only for 5 marks. So I have only summarized the requirement of 5 marks and we are going to discuss that today. So that's the basic agenda. So these notes that I'm talking about, these PPTs, I will be sharing those with you. And apart from that, if you want the Excel notes, if you want anything else, that will also be there. You just have to let me know whether you want it or not. Apart from that, if for some reason you are not able to watch the entire lecture, that's also fine. But it will be uploaded on my YouTube channel and I will send you the link to my YouTube channel so that if needed, you can also go through it. Uh, I have already shared the planner with you in terms of, how things are going to be, which day we are going to cover what. So don't worry on that count. Anything else apart from that, if you need, I will, of course, be more than happy to help you. If you want mock evaluation, you can let me know. Because of the scarcity of time, I'll be able to evaluate one mock for you. Matlab for people who have joined the regular batch, of course, for them there are two mocks. But people who have come only for this session, I can evaluate one mock. I'll also show you the kind of feedback activity that I do so that you also know how that specific thing is going to work. So I'll show you for AAA how the activity works and then you can get an idea. So if you want mocks evaluation, just let me know, but थोड़ा आपको advance में बताना पड़ेगा because time is limited and it becomes then a little difficult to, uh, tackle and handle everyone's request. So your mocks will get evaluated like these. I'll point out what you did well, what are the weaknesses, how should you perform better. अभी आपके पेपर में you don't have 20 professional marks, you only have 4 professional marks. So ऐसा areas of improvement and everything. I gave a proper 3-4 page feedback, but उसके लिए I need time. ठीक है? And for that you have to inform me in advance. Today we'll be focusing on financial instruments. I hope all of you have been added to the group. ठीक है? Be a little active in the sessions and try to answer the questions as and when they come along. Now, although financial instruments seems like a topic which is, it appears to be a daunting topic, but there are a select couple of things, that they keep on testing again and again. And financial instruments is never tested for like 15-20 marks. You could expect maximum 8 to 10 marks in the SBR exam on financial instruments. Okay, now financial instruments as a chapter, you have already studied that in the skill level, and at P level, there's a lot of focus not just on recognition and measurement of financial instruments, but on derecognition, on expected credit losses, on hedge accounting, and all of these aspects. Okay, so let's start with a basic understanding of what financial instruments or what financial assets are. Whenever I'm talking about financial assets, there are primarily four categories, but I have broken it down into one more. So your financial assets are cash, that is there in your cash box, then equity instruments of another entity. Please pay attention. The word is equity instrument, not equity share. So even if you are holding a warrant, even if you are holding a share option, that still qualifies as an equity instrument. Okay. Then there are contractual rights to receive cash from another entity. Because of this clause, if you have sold goods on credit to a customer and the customer is supposed to pay you a particular amount, that gets classified under contractual rights to receive cash. Then contractual rights to exchange financial assets under conditions that are potentially favorable to the holder. Now, what does that mean? Say, for example, let's think of a simple case where I have Pokemon cards and you also have Pokemon cards. Now I have some very commonly found Pokemon cards and you have a rare collection. So we are exchanging these cards with each other. Garvit is giving me four cards which are like rare and exclusive, and I am giving him four cards which are not, which are very easily found everywhere. So in this case, we are exchanging two items. He is giving me Pokemon cards. I am also giving him Pokemon cards. But what I am receiving is a rare item. So what I am receiving has a higher value as compared to the item that I am giving up. So contractual right to exchange assets under conditions that are potentially favorable to the holder, that also gets classified as a financial asset. And non-derivative contracts for which the entity is or may be obliged to receive a variable number of entities' own equity instruments, such as certain types of preference shares. We'll go into clause 5 a little later today. But most commonly what you will find is cash, equity instrument of another entity, and contractual right to receive cash. There are a couple of questions in the exam. There is one question in the exam kit where this non-derivative contract wala clause kicks in. We'll go to that question in some time. Now, in case of financial instruments, this is the only standard apart from IAS 41 agriculture where initial recognition happens at fair value. You must have seen every other accounting standard, be it PPE, investment property, inventory, intangible asset. Initial recognition always happens at cost. But financial instruments is the only accounting standard apart from agriculture where initial recognition happens at fair value. Now, what are financial liabilities? Financial liabilities would basically include three things. If financial asset was a contractual right to receive cash, a financial liability is a contractual obligation to deliver cash to another entity, which means a creditor, a trade payable would get classified as a financial liability. Contractual obligation to exchange financial instruments under conditions that are potentially unfavorable. We discussed the Pokemon cards wala example where it was in my favor to exchange the assets and I was getting the fairer end of the deal. If the conditions and exchange financial assets, guys, please put yourself on mute. Uh, Unmute yourself only if you have to ask me a question, and before asking a question, make sure that you raise your hand. Okay. In terms of non-derivative contracts, contracts for which the entity is or may be obliged to deliver a variable number of entities' own equity instruments, where the entity delivers a fixed number of its own equity instruments, that is not classified as a financial liability. Why that is so? We'll get into it. Now, IFRS 9 primarily records financial liabilities using two methods, measured at amortized cost or measured at fair value through P&L. There is a third category which says that certain financial liabilities can also be recognized at fair value through other comprehensive income. What do you mean by fair value through P&L or fair value through other comprehensive income? When I say fair value through P&L, what I mean to say is that the change in fair value of that particular financial instrument is recorded via profit and loss account. Or if I say fair value through other comprehensive income, that means the change in fair value of the financial instrument is primarily recorded through the change in is recorded through other comprehensive income. Now the question arises, Kiar, how is the initial recognition done and how is the subsequent recognition, how is the subsequent measurement done? Okay, let's talk about financial liabilities first to begin with. Now, when it comes to financial liabilities, there are three categories. There are The classification depends upon how exactly what is the idea of the business for holding these financial liabilities. Okay. So if a business entity is holding financial liabilities with an intention to keep it until maturity. Okay. If the entity is holding the financial liabilities with an intention to hold it till maturity, then in that case, you use the amortized cost approach. Or, but on the other hand, if you have kept the financial liabilities with an intention to trade it in the short run and make money by way of fair value changes, then it is recorded at fair value through P&L. Okay, so if the financial liability is held so as to make quick gains via change in fair value or via exchange for something else, we can say that it is held at fair value through P&L. If you remember in our batch, the one example we had discussed was bills receivable and bills payable. I hold certain bills payable, which is basically an obligation to pay cash to someone. Now, somebody else's obligation I am trying to settle by transferring the bills payable to him. So, I don't intend to hold it until maturity. I want to settle the obligation by exchanging the bills payable with another individual. So in that case, the change in fair value, if at all it takes place, is recorded through P&L. Transaction costs are also expensed off to P&L. But if you hold a financial liability, if you have a loan in your books of accounts and you don't want to trade it in the short run or you don't want to exchange the liability with something else, but you intend to keep it till the last date and make the repayment to the lender, then in that category, the financial liability is recorded using the amortized cost approach. Okay, now the initial recognition, when I say happens at fair value, how is fair value calculated? Nominal value minus discount on issue minus the issue cost, which is basically the net proceeds of the issue. The initial recognition of a financial liability happens at fair value. And how do you define fair value? Nominal value minus discount on issue minus the issue cost. That is basically the net proceeds. After the initial recognition is done, आपने financial liability record कर लिया books of accounts में, then at the end of the year, what approach? You can either use the amortized cost approach or you can use the fair value through P&L approach. Most borrowings will be recorded using the amortized cost approach only. Very rare cases will you have to use the fair value model in financial liability. ठीक है. And we discussed how is the initial recognition done. Now, if you want to use the amortized cost approach, this is the table I would recommend you to prepare. Opening balance. How do you record the first entry of opening balance? The initial recognition using the fair value idea that we discussed here. Nominal value minus discount on issue minus cost of issue. This gives me my initial recognition का number. उसमें आप add करो finance cost using the effective rate of interest. ठीक है? This effective rate of interest will always be given to you in the paper. You will never be asked to calculate the effective rate of interest in the SBR exam. ठीक है? Add the finance cost, subtract the amount of cash payment actually made. What do I mean by that? Uh, the amount of cash that you pay calculated on the basis of face value into the nominal rate of interest. Use that. That is the amount that you actually pay to the lender. And what is your closing balance? Opening balance, that is initial recognition, plus finance cost calculated using the effective rate of interest minus the cash payment made. This will give you your closing balance. Keep on doing. Last year one ka closing becomes year two ka opening. Then finance cost add karo. Keep on doing this activity till the last year. In the last year, in the cash payment column, include the amount of interest that you are paying, include the principal that you are repaying, and if there is any premium on redemption, usko bhi yahan pe add karo, and then you get the closing balance, which is opening plus interest calculated using the effective rate of interest minus this total amount of interest, face value, and premium on redemption. ये जो कॉलम है फाइनेंस कॉस्ट का कॉलम, ऑल द वैल्यूज फ्रॉम दिस कॉलम गो टू P&L account. The cash payment values go to statement of cash flow, whereas the closing balance का जो column है, these values go to the balance sheet at the end of the year. अब this approach is used when you have fair value, sorry, when you are using the amortized cost approach. Same table you have to use, be it a financial asset or a financial liability. The calculation does not really undergo a change at all. Now, apart from this, This was a typical financial liability measured using the amortized cost approach. Now, depending on how exactly is the classification happening, the treatment in the financial statements is going to differ. Now, what do I mean by that? Let's come to that in a moment. Okay, before doing that, let's understand the concept of a compound instrument. Now, what is a compound instrument? A compound instrument is a financial liability which has features of both financial liability and equity. The best example for this is a convertible loan note or a convertible debenture. How is a convertible debenture issued? It is issued at face value. For the first couple of years, maybe 5, 6 years, you will pay interest, and at the end of the fifth year, the holder of the instrument gets a choice whether to convert it into equity or to get the amount redeemed at the end of that particular period. So, if you get redemption, then it has features of a financial liability. If you get it converted into equity shares, then of course it has features of equity. Now, how to account for a compound instrument is that you will have to separate out the liability component and the equity component. Now, there are certain fixed steps that you need to follow. Let's understand what those steps are. Anytime you get a question on compound instrument, just follow this and you will have your answer in place. And don't worry, all of this will be shared with you. Write all the necessary details from the question like date of issue, date of redemption, term, that is, the tenure of the instrument, coupon rate, interest at coupon rate, everything. Then the next step is to calculate the liability component. See, what is a liability? Financial liability. Financial liability is a contractual obligation to deliver cash to another entity. What do you mean by contractual obligation to deliver cash? At the end of a particular period, you have to compulsorily pay an amount to the third party. Now, in case of a convertible loan, what are the promised payments that you have to make? You have to pay interest at the end of each year, year 1, 2, 3, 4, 5. And if the holders opt for the redemption option, then at the end of year 5, you have to repay the principal also. तो आप क्या करो? You prepare this table, write down the date of outflow, the timing of outflow, the cash flows. From year 1 to 5, you will have interest, interest, interest every year. Year 5 may you will also have the amount of principal repayment. Okay. Calculate the present value using the discounting factor, effective interest rate given in the question. You will get the present value. The total of this present value column is your liability component. What does it represent? It represents contractual obligation to pay cash to the other entity. Then you have to calculate the equity component. How will you get the equity component? Net proceeds of the issue law, which will be given to you in the question. From that, subtract the value of the liability component. What you will be left with is the equity component. अब जो liability component है उसको you keep on accounting for that using the amortized cost method that we saw 5 minutes ago. Year 1 to year 5 आ जाओ. End of year 5 you will have the financial liability balance. Now in a question, they will always have only two scenarios. Either all the holders opt for conversion or all the holders opt for redemption. In real life, that is not going to be the case. Some will opt for conversion, some will go for redemption. But in the question, mostly everybody will opt for the conversion option. So at the time of conversion, what entry are you supposed to record? The financial liability is getting extinguished in your books of accounts. So financial liability को डेबिट करो. ये equity component था. See, you had not credited equity share capital, but you had credited an account called equity. See, equity share capital कब credit होगा? Only when shares are issued. At this point in time, what you were saying is that total amount raised was 60 lakh, out of which 54 lakh 60,000 is my liability component and this is my equity component. So, see, a convertible instrument has features of both and you separated out both. But this is not equity share capital yet. Why? Because no shares have been issued. Now, if all the holders opt for the conversion option, debit financial liability, debit equity, and credit equity share capital using the number of shares into face value per share, the balancing figure will go to share premium. Okay, now think about it this way. This is a very interesting proposition that can happen in the paper. ठीक है, ये है आपका convertible debt. Convertible debt has a coupon rate of 8%. Now, coupon rate is 8%. You have classified this as financial liability. You have classified this as equity. Now, in your books of accounts, the interest that you will record might be an amount of 8%, but out of, see, this is the amount that you will end up paying, but there is a possibility that the financial liability component is not 60 lakh, it is only 54 lakh 60,000. Now, honoring the matching principle, I'm sure you will agree with me that when you record interest or finance cost in your P&L, you should not multiply 60 lakh with 8%. You should multiply 54 lakh 60,000 with whatever is the effective rate of interest, and that amount should be shown as a finance cost, not 60 lakh into 8%. वो finance cost आपको कहाँ से मिलेगा? You will get it from the amortized cost table. Okay. Now, you will have situations of compound instrument in the exam, possibility है. And mostly these compound instruments are only convertible loan notes. अपने SBR के syllabus में you only have convertible loan notes. Nothing else is there. Make sure that you learn the steps. इसको ऐसे का ऐसा follow करो in the paper and you will get your desired number of marks. ये हो गया accounting for a financial liability. In case of financial asset, we have two specific focus points in the paper. One is accounting for equity instruments and the other one is accounting for debt instruments. अब equity instruments के case में there are two categories. One is equity instruments held for trading and the other one is equity instruments not held for trading. If the equity instrument is held for trading, then the change in fair value should be recorded through profit and loss account. And whatever transaction costs you incur, those transaction costs should be routed through P&L. But if financial assets, that is investment in equity shares, is not held for the purpose of trading, and you have made an irrevocable decision to designate the financial asset through other comprehensive income, then fair value change will be recorded through OCI and transaction cost is added to the financial asset ka value. Now, there are two things necessary and the two conditions are connected with an and clause. Okay. These are not held for trading. I think that is self-explanatory, but the business entity has made an irrevocable decision to designate it through OCI. And where will this decision be made? This has to be made by the company in the board meeting where all such important decisions are made by the company. So, if the financial asset is not held for trading and the company has made a decision to record it through OCI, then any fair value change gets recorded through OCI and transaction cost is not expensed off to P&L. It is added to the value of the financial asset. Now, remember one thing. If this kind of a financial asset which is held for trading, equity shares which are held for trading, if they are sold, the gain or loss gets recorded through P&L and the story is complete. But if the equity shares that you hold, these are not held for the purpose of trading, point one. And point two, these and the entity has made an irrevocable decision to record it via OCI. If such a financial asset is sold, if such an equity instrument is sold, then whatever is the gain or loss on disposal, that is recorded through OCI and it is never reclassified to P&L. तो आपको ना कभी कभी ethics में question आएगा या आपको section B में question आएगा where they will give you this accounting treatment that this particular equity instrument was not held for trading, designated through OCI. Later on, it is sold, and the business or the finance CFO, he wants to reclassify the gain from OCI to P&L. There, you will have to specifically point out that as per IFRS 9, this reclassification adjustment is not allowed. Okay. Kabhi this is also asked in the ethics wala section also, where they say that this is the accounting treatment that has been done, and then you have to comment on it from an ethical standpoint. There, naturally, you will say that there is no professional competence because you did not follow, then there is no integrity. I mean, usme to same set of points keep on getting tested. Okay. Now, if the financial asset is a debt instrument, you are holding bonds or debentures of the other company, you have to ask yourself one question, which is, why are you holding the debt instrument? Are you holding it to collect contractual cash flows? Like I have invested in gold bonds of RBI. Now, I don't intend to trade in the gold bonds. I have invested the money. I'm going to receive my cash after 8 years. So I've invested the money only to collect contractual cash flows. I don't intend to trade it. Then you should use the amortized cost approach, transaction cost to be added to the asset value, And then you know the amortized cost approach wala working, where you have to use the effective interest method for calculating interest income, and then wo pura calculation like the table that we saw, you will have to do it. If I'm trying, my intention behind holding the instruments is to collect contractual cash flows. But if suddenly there is a favorable market condition that is there in my favor, I don't mind selling the bond and collecting contractual cash and collecting the proceeds of disposal. In that case, you will record it at fair value through other comprehensive income. Now, a classic example is again the gold bond. RBI in 2022, 23, they were issuing gold bonds. And what was the idea? Today, you pay us equivalent to 10 grams of gold. At that time, the rate was 55,000. And what did RBI say? On the date of redemption, whatever is the rate of gold, we will pay you an equivalent amount. I'm sure you know that right now the rate of gold is above 1 lakh, or hovering around that number. The initial plan was to issue the bonds for 8 years and return the money after 8 years. But right now, just 2 or 3 days ago, I read this news item wherein they said that RBI has decided to open the option of premature redemption. Now, I am a holder of these gold bonds. मैंने 50,000 invest किया था with an intention किया जब maturity होगा, I will get my money. But today I can clearly see that the rate of the gold is, for 10 grams, now the rate is 1,10,000, and I had invested 55 3 years ago. Within 3 years, the money has doubled. Now, if I see that there is a good selling opportunity and I can, make good chunks of money, then in that case, I don't mind selling the instrument and collecting the money by way of redemption cash flows. That situation, in such cases, you will record it at fair value through other comprehensive income. The transaction cost should be added to asset value, and interest income should be recorded in P&L using the effective interest method. This is the second category of bonds. And the third category of debt instruments is not for reasons one or two. They are only held for trading in the short term. Like you trade in shares, people trade in bonds also. 80 में खरीदा, 90 में बेच दिया, 90 में खरीदा, 95 में बेच दिया. In that case, the change in fair value gets recorded through profit and loss account. Transaction cost gets expensed off to P&L, and the interest that you show in P&L is face value into coupon rate. ठीक है, आप ये एक टेबल भी पढ़ लेंगे बिफोर द पेपर. एटलीस्ट दिस बेसिक आइडिया कि यार हाउ शुड द डेट इंस्ट्रूमेंट बी अकाउंटेड फॉर कैन बी टेकन केयर ऑफ. We have done, as you can see, we have done around 4 questions on this particular topic, so you should be able to tackle that in the exam. Right now what we are doing is we are only revising the concept. ठीक है, अब debt instruments के केस में there is a possibility which you will never see in the case of an equity instrument, which is the credit risk or risk of default. Now, what is default? Default is a situation where the other entity does not pay the amount it was supposed to on the specific date identified in the contract. So in case of debt instruments, say I had given a loan to someone and that person is supposed to pay interest every 6 months. He misses out on the interest payment deadline, or he does not repay the annual installment that he was supposed to pay. The risk of this particular default is known as credit risk. A credit risk can be there only in those cases where there is a promise to pay. Equity instruments के केस में there is no contractual right to receive cash ना. एक बार कंपनी में पैसा इन्वेस्ट कर दिया, company is not obliged to repay the amount to you at any point in time. When is there a promise to repay? The promise to repay happens only in case of debt instruments. So credit risk and risk of default will be seen only in case of debt instruments, first of all. For that, you will have to consider various aspects like what is the probability of default, agar default हुआ तो कितना पैसा डूबेगा, what will be the exposure at that particular date. All of these points you will have to consider. And see, we follow the prudence principle. What does the prudence principle say? The prudence principle specifically mentions that, listen, do not account for expected incomes and gains, but if you see an expected loss occurring in the future because of a past event, make sure you account for that particular loss right now. Now, since years, I'm sure you have been using the term provision for bad and doubtful debts, provision for bad and doubtful debts. कॉलेज में तो आई थिंक आपको आरडीडी या रिजर्व फॉर डाउटफुल डेट्स भी बुलाते थे. नाउ व्हेन यू वेंट a little higher, I'm sure your college professor said कि अरे it is not a reserve, call it a provision. Call it a provision for bad and doubtful debt. But now when I think about it, it's not even a provision, right? What is a provision? It is a present obligation as a result of past obligating event, which will lead to outflow of resources embodying economic benefits. यहाँ पे there is a possibility that my customer will not pay and I will incur a loss. So there is no obligation to pay na. There is a possibility that the amount receivable might not be received. Hence, we don't call it provision for doubtful debts anymore. We call it allowance for receivables or we call it allowance for losses. अब ये जो credit risk है, because of this, there is a possibility that the business entity will not recover the full amount. ठीक है, there is a possibility that the business entity will not recover anything, or they will not recover a part of the amount that they were supposed to receive. Now, because we follow the prudence principle and we are prudent accountants, we make it a point that if a loss is going to occur in the future, we set aside a part of profit, or we create an allowance specifically for this particular item. This till skill level bolo ya till knowledge level bolo, you would call it provision for bad debts. Now we are going to call it allowance for receivables. अब ये जो expected credit loss है, this is an expected loss. Okay, the loss has not actually taken place. So let's understand, what does IFRS 9 say about these losses. Now, IFRS 9 says that loss allowances must be recognized for financial assets that are debt instruments and which are measured either at amortized cost or fair value through OCI. We used to call it provision for bad and doubtful debts earlier. Now, if the credit risk on the financial asset has not increased significantly since initial recognition, loss allowance should be equal to 12-month ECL. If the credit risk has increased significantly since initial recognition, then loss allowance should be equal to lifetime expected credit loss. Now, what do we mean by credit risk has increased significantly? Suppose I sell goods on credit to Mayank, and on that date, the probability of default was 0.05%. The sale happened today on 25th of August, and my financial year end is 31st of December. Now, on the date of giving him the loan or on the date of selling goods to him on credit, what was the probability of loss? It was only 0.05%. And on the balance sheet date, it is only 0.06%. So, the loss has gone up from, or the probability of loss has gone up from 0.05% to 0.06%, which means the credit risk on the financial asset has not increased significantly since initial recognition. The loss allowance should be equal to 12-month expected credit loss. What do you mean by 12-month expected credit loss? अगले 12 महीने में कितना लॉस हो सकता है उसका वैल्यू. ठीक है, how much of a default can occur in the next 12 months. Second category is if the credit risk on the asset has increased significantly since initial recognition. ये 0.05% था on the date of initial recognition, but year end तक the probability of default has gone up to 10%. 0.05% का हो गया 10%, which means the credit risk has increased significantly. In that case, you will calculate the lifetime expected credit loss. ठीक है, अब what is credit loss? All of these terms are defined in the financial instruments topic. ठीक है, credit loss is present value of difference between contractual cash flows and the cash flow that the entity expects to receive. ठीक है, now there is a debtor, Amog. ठीक है, amount outstanding as per agreement is 2 lakh. This is my contractual cash flow. Under contract कितना promise हुआ है? 2 lakh promise हुआ है. This amount is to be received 1 year later, and this person is going through a financial crisis. So I have a feeling कि यार पूरा 2 लाख नहीं देगा, सिर्फ 1,85,000 देगा. I want, मतलब as per the contract, I should get 2 lakh, but I expect to receive only 1,85,000. तो इन दोनों का डिफरेंस निकालो 15,000, उसका प्रेजेंट वैल्यू निकालो, that is your credit loss or credit risk. Present value of difference between contractual cash flows and the cash flows that the entity expects to receive. Now, what is expected credit losses? Expected credit loss, वो आपका जो expected value का concept है ना, वो यहाँ पे आता है. अब think about it. There is this debtor called Amog. he is supposed to pay me 2 lakh rupees as per the agreement. Contractual cash flow, cash flow promised under the contract. 1 साल के बाद पैसा देना है, बट आई नो दैट दिस पर्सन इज गोइंग थ्रू अ फाइनेंशियल क्राइसिस, सो वो 185 भी दे सकता है जिसका 20% चांस है, ही कैन पे 175 ऑल्सो जिसका 30% चांस है, ही कैन पे 190 ऑल्सो जिसका 50% चांस है, ठीक है। सो 15,000 का लॉस प्रोबेबिलिटी इज 20%, 25,000 का लॉस प्रोबेबिलिटी इज 30%, 10,000 का लॉस प्रोबेबिलिटी इज 50%। आप क्या करो, कैलकुलेट द प्रेजेंट वैल्यू ऑफ लॉस। कैसे निकलेगा प्रेजेंट वैल्यू ऑफ लॉस? कॉन्ट्रैक्चुअल कैश फ्लो माइनस अमाउंट दैट द एंटिटी एक्सपेक्ट्स, ठीक है। लॉस 15,000, 25,000, 10,000, इसका प्रेजेंट वैल्यू निकालो। And how to calculate expected value? 13635 into 20%, 22725 into 30%, 9090 into 50%. Present value को convert करो expected value में by multiplying with the probabilities. This is your expected credit loss which you are trying to account for. And lifetime expected credit losses मतलब from now till the end of the till the end of the life of this particular instrument, जितने भी events of default are possible, giving the value of all those events. And 12-month expected credit loss means in the upcoming 12 months, how much do you think is going to be the default? That is the 12-month expected credit loss. Okay. Now, when you are measuring expected credit losses, the calculation should be unbiased and probability weighted, एक objective calculation reflecting the time value of money if the amount is going to be received far off into the future, and based on information about past events, current conditions and forecast of future economic conditions. So अगर आपको expected credit loss निकालना है, so you should not just be looking at the past data, you should look at present circumstances, and you should also look at the change of circumstances that is likely to occur in the future. So expected credit loss, if you have to measure, then this is the approach that you have to take. Expected credit loss पे we haven't seen too many questions. ज्यादातर questions जो आपको एग्जाम में आते हैं those are on classification of financial instruments या accounting treatment. इस पे less number of questions are tested. Okay. Now just because there has been an expected credit loss, that doesn't mean कि the interest calculation will be on a lower amount. The interest calculation will always be on the total gross value, unless, of course, the asset is credit impaired. Now, can someone tell me the meaning of the word impaired?
Sir, sudden loss in the value of an asset.
Sudden loss in the value of an asset, fair enough. If I were to express it in like a formula, how would you calculate impairment?
Sir, when carrying amount is
Carrying
more
amount.
than the recoverable amount.
Carrying amount is more than the recoverable amount. Very good. So, if a business entity is going through a sustained period of financial difficulty, there are certain negative, pieces of news floating against the company कि यार ये बंद पड़ सकता है, या they are going in for a plan of restructuring, the company is going through financial troubles. That means there are indications that आपने जितना लोन दिया है, whatever is the amount of loan that you have given, you might not be able to recover that amount of loan. In that case, the asset is said to be credit impaired. Under IFRS 9, a financial asset is considered credit impaired when one or more events have occurred that have a detrimental impact on the estimated future cash flows of the asset. You gave your loan to someone whose business was, say for example, किसी का electronics का shop था, and the shop was in the basement, and the Mumbai flooding happened or the Gurgaon flooding happened, and because the shop was in the basement, all the inventory got destroyed, the shop got destroyed, and now it seems as if there is a going concern crisis that might occur. Because of this, now there is a significant difficulty that you will experience in collecting cash from this customer. So, significant financial difficulty, breach of a contract where this particular customer is not honoring the agreements made, or concessions granted. Concessions granted matlab this particular customer had taken loans from other people, and he approached them to give concessions because he is unable to pay. Why would you otherwise go for concessions, right? If you are asking for concessions from a supplier, then the only circumstance when you will do it is when you are going through a significant financial difficulty. or there is a probable bankruptcy. All of these are indicators of assets becoming credit impaired. Now, how do you measure the expected credit loss for credit impaired assets? For credit impaired assets, IFRS 9 requires expected credit loss to be measured as difference between gross carrying amount and present value of estimated future cash flows discounted at the original effective interest rate. Suddenly the client or the borrower is going through significant financial difficulty. Carrying amount is 1 lakh, but present value of estimated future cash flows is only 40,000. Then 60,000 is the impairment loss. Now, even on such assets, if you want to calculate and record interest, okay, interest is calculated on the net carrying amount, that is gross carrying amount minus the loss allowance. Before credit impairment took place, it was calculated on the gross carrying amount. Now, you could have a situation where an entity purchases an asset which is credit impaired at origin. What do you mean by assets which are credit impaired at origin? Think about, I think क्लास में हमने वो HDFC and ICICI वाला एग्जांपल यूज किया था, right?
Yes, sir.
Okay. So assume करो I am HDFC Bank and you are ICICI Bank. I have given loans to a lot of customers, out of which there are around 10 customers who who are not bad customers, okay? Just one moment, guys. So I have 10 loans, and see these customers now, they have started defaulting on the interest payments, and they have done consistent defaults for 6 7 months now, which basically means that these have become non-performing assets for HDFC Bank. Now I want to keep a clean balance sheet. I don't want all these delinquent, late paying and faulty customers, defaulting customers on my balance sheet. So, and I don't want to spend time in collecting cash from these customers. 100, let's assume that this was for the total value of these customers. The carrying amount of the loan given to these customers is 1 lakh, and I believe, yeah, even if I put in my best possible effort, I'll barely be able to collect 60,000 from these customers. These assets, in my opinion, are credit impaired, that is, difficulty is going to be experienced in collection, and I don't want the burden of non-performing assets on my balance sheet. So what I do is, there is ICICI Bank, I give them a proposal, or they reach out to me and they express interest in buying these credit impaired assets. Now, you might have a question, why would ICICI Bank be interested in buying credit impaired assets? See, credit impaired assets, in my opinion, they are going to fetch only 60,000. ICICI Bank thinks that, you know what, we'll pay 55,000 or say 60,000 to HDFC Bank, and we'll take these assets from them. We'll take over these loans from them. And we have a belief, as ICICI Bank, we have a belief that we have a very strong collection team which will follow up with these people and we'll be able to recover the amounts. So what ICICI Bank is thinking is 55,000 deke will take over the assets and we'll deploy our collection teams, and we think we'll be able to recover some 72,000. So for them, it is a profitable deal, which is why assets which are credit impaired at origin are also traded between entities. It's a very common practice to transfer, these delinquent loans on or non-performing assets from one bank to another bank. अब उसका operation is not there in SBR, but you should know what the term assets which are credit impaired at origin, what does it mean? ठीक है. In the case of these assets, a purchased or originated credit impaired financial asset is one that is credit impaired on initial recognition, And in case of these, you should use the credit adjusted effective interest rate, which is a significantly lower rate, and expected losses have to be incorporated. Initial expected credit losses are incorporated into the credit adjusted EIR. So you reduce the rate of interest in order to make a provision or make or include the impact of future defaults that will take place. Okay. Now, once these credit impaired assets are taken on as a part of the financial statements, now imagine that on the date you took over these assets, the probability of default was 70%. And on the balance sheet date, the probability of default has gone up to 80%. That change will have to be reflected as another 10% ka expected credit loss in your financial statements. You don't have a lot of numericals on financial assets which are credit impaired at origin, but आपके syllabus में है. So make sure that you utilize that or you have adequate knowledge of that. Now this table basically tells us कि regular assets versus credit impaired assets versus assets which are credit impaired at origin. ये credit impaired assets मतलब जब लिया तब अच्छा था. Now the asset has become credit impaired and these were like completely useless from the date you acquired them. In case of regular assets, interest is calculated on gross carrying amount. In case of credit impaired assets, it is calculated on net carrying amount, which is gross carrying amount minus loss allowance. And in case of adjust assets which are credit impaired at origin, interest is calculated using the credit adjusted effective interest rate. ठीक है. So this table basically presents to you कि interest recognition कैसे होगा for regular assets, for credit impaired assets and for assets which are credit impaired at origin. ये सबसे बेकार कैटेगरी है, ये सबसे सेफ कैटेगरी है. In AFM, I am sure you have looked at different bond ratings ना, triple A rating, double A rating, triple B rating, B rating, triple C rating. A B rated bond could be a bond which is credit impaired at origin. Still, entities do deal in these junk bonds also. Now, when it comes to financial assets, we spent time understanding the recognition criteria and the measurement. You should also know how is the derecognition of financial assets and liabilities done. See, to recognize means to bring something into the books of accounts. To derecognize means to remove something from books of accounts. Now, in case of financial assets, what is the criteria for derecognition? Either the expiry of rights, that is the contractual cash flows with respect to this asset, they have ceased. That is, now you don't have the right to collect the contractual cash flows, or significantly all the risks and rewards relating to ownership of the asset have been transferred. The best example that they have used in your SBR syllabus is a situation of factoring. If it is a with recourse factoring and if it is a without recourse factoring, that determines whether it is whether you should derecognize the financial asset or not. A without recourse factoring is a situation where the risk of default has passed on to the factor. In that case, you will derecognize the debtor from your books of accounts. On the other hand, a with recourse factoring is a situation where the risk of default has not passed on to the factor. And because it has not passed on to the factor, the significant risks and rewards of ownership are still with the customer, are still with you. So you cannot derecognize the financial asset at this stage. In case of financial liabilities, when do you derecognize? When the financial liability is discharged, or discharged as in you have paid the amount to the other party, or cancelled. The other part, like I had given you a loan of 5,000, but then, I just am very fond of you. तो मैंने आपका लोन माफ कर दिया. That is when the obligation is cancelled, and of course it has to be noted, or expired. The time limit for making the payment has gone away. So now the obligation has expired, and then you can derecognize the financial liability. There are situations of modification of financial liabilities or financial instruments in general where the original financial liability can get derecognized. When the derecognition criteria are met, specific accounting treatments are required based on the type of financial instrument involved. The difference between the carrying amount of the asset and the amount received or paid for it should be recognized in P&L. For investment in equity instruments held at fair value through OCI, the cumulative gains and losses recognized in OCI are not reclassified to P&L. Derecognition doesn't mean that the contractual right has to expire. Even if you sell the equity shares are going out of your books of accounts. And because they are exiting your books of accounts, you will derecognize, right? So if it is an equity instrument which was originally recorded at fair value through OCI, आपने बेचा and at the time of sale there was a gain, that gain does not get reclassified. Same situation जब debt instrument के case में होता है, in that case the amount of gain or loss on disposal gets reclassified to P&L. This is one difference between equity instrument and debt instrument. Okay, now a critical part in your SBR का exam can be the accounting for derivative instruments. AFM लेवल का डेरिवेटिव इसमें नहीं है. इट्स अ वेरी सुपरफिशियल अप्रोच टू अंडरस्टैंडिंग अकाउंटिंग फॉर डेरिवेटिव इंस्ट्रूमेंट्स. ठीक है. नाउ डू यू नो व्हाट इज अ डेरिवेटिव इंस्ट्रूमेंट?
Sir, which derives its value from an underlying asset.
Which derives its value from an underlying asset. Okay. uh, in these derivatives the initial investment is minimum, right? Which is why if you remember when we do the accounting, at the initial investment is almost zero, and if at the end of the year the fair value has increased by 10,000, तो आप 10,000 record करते हो through P&L in that case. And most of these derivative contracts are settled into the future, and usually these contracts are settled for the net amount. Actual delivery of the underlying asset doesn't happen. Okay. A contract to buy or sell a non-financial item is only a derivative if it can be settled net in cash and it was not entered into for the purpose of receipt or delivery of the item. इस ये जो पार्ट है ना नॉन फाइनेंशियल आइटम कॉन्ट्रैक्ट्स, इस पे एक क्वेश्चन है इन द एग्जाम किट. आई थिंक लास्ट टू लास्ट वीक हमने सॉल्व किया था इफ आई एम नॉट मिस्टेकन. यू नो द 4 टाइप्स ऑफ डेरिवेटिव्स. एएफएम आपने किया होगा तो वहां पर है. यहाँ पे यू जस्ट नीड टू नो द नेम्स फ्यूचर्स, फॉरवर्ड्स, ऑप्शंस एंड स्वैप्स. इस पे भी देर आर अदर डेरिवेटिव इंस्ट्रूमेंट्स, बट नन ऑफ दीज आर गोइंग टू बी टेस्टेड इन द पेपर. पेपर में सिर्फ लिखा रहेगा द एंटिटी एंटर्ड और इट टुक अ फ्यूचर्स कॉन्ट्रैक्ट और इट एंटर्ड इनटू अ स्वैप और इट व्हाटएवर, बट the nature of derivative contract will have no bearing whatsoever on your answer. ये बात याद रखो. Now, derivatives are initially recognized at fair value, and transaction cost is expense to P&L. At each reporting date, the derivatives are remeasured to fair value. Fair value changes are recognized in P&L unless hedge accounting is applied. So initial investment at fair value, change in change in the fair value is recorded through P&L. ठीक है. Now, there is a special type of contract in that they have covered in financial instruments called as executory contract. I think ये फिल कंपनी वाले क्वेश्चन में है ना executory contract, त्रिशा?
Yes, sir.
इन्वेंट्री वाला क्वेश्चन है, राइट? What is an executory contract? An executory contract is one which is equally unperformed on both ends. For example, I'm going to start a new batch and neither have I delivered the service, neither have you paid. The contract is equally unperformed or underperformed on both ends. That is an executory contract, which means, say, for example, you have entered into a futures contract to buy 50 kgs of inventory from the other entity. Now, आपका ऑब्लिगेशन है, व्हाट इज योर पार्ट ऑफ द ऑब्लिगेशन, योर पार्ट ऑफ द डील, दैट यू हैव टू पे 50,000 for purchasing the inventory. What is the responsibility of the other party? The responsibility of the other party is to deliver the inventory to you. So, under this situation, neither have I paid the cash nor has the other party delivered the inventory to me. This is an executory contract. Executory contracts are not normally recognized in financial statements until they are onerous, in which case a provision would be recognized as per IAS 37. What is an onerous contract? An onerous contract is something for which the unavoidable cost of meeting the obligation exceeds the benefits to be received from it. मतलब contract completion का cost is more than the benefits that you are likely to derive from that contract. And for an executory contract to be recognized as onerous, the contract must create enforceable rights and obligations. See, a futures contract could be termed as an onerous contract. Why? In certain circumstances, there is a possibility. See, futures contract में आपके पास choice नहीं है. Like options contract has a choice whether you want to exercise the option or you want to let it lapse. In case of a futures contract, you don't have a choice. आपको वो contract fulfill करना ही पड़ेगा, even if it is not beneficial for you. In that case, it could become an onerous contract where the cost of completing the contract is more than the benefit you derive from it. ठीक है. Then one critical aspect in आपका this thing derivatives is the hedge accounting. Okay, hedge accounting में we have two hedges that we are going to discuss. There is a fair value hedge and there is a cash flow hedge. Okay, now what is a hedged item? जो आइटम में वेरिएबिलिटी आने वाला है, ठीक है, जिस आइटम का प्राइस चेंज हो सकता है एंड यू आर कंसर्न कि अरे इसका प्राइस चेंज हो गया तो मेरा क्या होगा, द आइटम whose price is subject to fluctuations is the hedged item. For example, I want to buy a ticket for a Coldplay concert. Now, there is a possibility that the price will go up to 50,000 also. That variability is possible, and I want to ensure that I don't end up paying so much. मुझे एक fixed price में वो मिलना चाहिए. That item whose price is subject to change, which is giving me sleepless nights, that is my hedged item. And what is a hedging instrument? A futures contract, a forwards contract, an option, whatever it is, which allows me to purchase this Coldplay ticket at a fixed price. That is my hedging instrument. And hedging relationship is the relationship between hedged item and the hedging instrument. अब hedge accounting में आपके पास दो अलग अलग types of situation आएगा, fair value hedge and cash flow hedge. Fair value hedge क्या है? A hedge of exposure to changes in fair value of a recognized asset or liability or an unrecognized firm commitment that could affect profit or loss. Hedge of exposure to changes in the fair value of a recognized asset or liability. मतलब I have some inventory in my warehouse. There is what is my concern? यार मैंने इन्वेंट्री खरीदा 100 रुपीज में with an expectation that I will be able to sell it at 50. Now I have a fear because of the market conditions that the value of this particular item is likely to drop. ठीक है, I have a fear that the value of this particular item might drop in the future. If the value drops and I try to sell it to the customer, मुझे भी कम पैसा मिलेगा. So the fluctuation in fair value is giving me matter of concern. That is a fair value hedge. And a cash flow hedge is hedge of exposure in a hedge of exposure to variability in cash flows attributable to a particular risk associated with a recognized asset or liability or a highly probable forecast transaction. You know, in AFM we prepare cash flow forecast. Now, what if, see, my entire business model, my entire funding is based on the assumption that this cash flow forecast will be realized. Now, what if it so happens कि यार ये जो cash flow forecast है, some circumstances in the economy undergo a change, and now my fear is कि ये कम पैसा मिलेगा in the projected cash flows in the future. To protect myself from these fluctuations, if I take a hedge, that is known as a cash flow hedge. ठीक है. Now, for effective hedge accounting, there are three requirements that you need to fulfill. One is economic relationship. There has to be a relationship between the hedged item and the hedging instrument. Say the fluctuation is expected in the price of gold, then your hedging instrument should basically cover the changes in the price of gold. So वो एक correlation necessary है. Then credit risk dominance. The effect of credit risk must not dominate the value changes resulting from economic relationship. What do you mean by effect of credit risk? See, price fluctuating because of the market forces of demand and supply is okay. We are taking the hedge for that fluctuation in price. But if the price of a debt instrument or the price of any item drops because the credit worthiness of the borrower has gone for a toss, that means there is credit risk dominance. जो आपका financial instrument है, जो hedging instrument है, उसका price is falling down और hedged item का price is falling down, not because of market forces of demand and supply, but because of the lack of credit worthiness that has come into the picture, then hedge accounting cannot be applied. There you will have to account for expected credit losses. And hedge ratio. The hedge ratio must reflect the actual quantity of hedging instrument used to hedge the actual quantity of the hedged item. अब इसका एक एग्जाम्पल आपने एएफएम में देखा होगा, इफ यू हैव स्टडीड एएफएम. सपोज माय ओवरऑल एक्सपोजर टू फॉरेन एक्सचेंज इज $60,000 and my standard futures contract are in a contract size of $1 lakh. So I can buy one contract. I cannot buy 60% of the contract. ना मुझे पूरा खरीदना पड़ेगा. When I purchase the futures contract, it gives me a cover of 1 lakh. But what is my exposure? My exposure is 60,000. In that case, the hedge ratio is imbalanced and you cannot use hedge accounting in those cases. ठीक है. अगर आपका फेयर वैल्यू हेज है तो आपका अकाउंटिंग ट्रीटमेंट अलग होगा. अगर आपका कैश फ्लो हेज है तो आपका अकाउंटिंग ट्रीटमेंट गलत होगा. In your exam, you need to know the three effectiveness criteria, but you don't need to spend time on, understanding that from an AFM perspective. Acha, and one important thing is that there has to be a formal documentation that this particular instrument was purchased in order to cover the risk of price fluctuation in one particular item. Now, what is the accounting treatment of fair value hedges? Hedging instrument is remeasured to fair value with gain or loss recognized in P&L, unless of course it is unless hedging an equity investment at fair value through OCI. Hedged item, carrying amount adjusted for hedged risk with gain or loss recognized in P&L even if normally measured at cost. Basically, hedged item का value change हुआ, recognize it in P&L. Hedging instrument का fair value change हुआ, normally recognize that in P&L. The gain or loss on the hedging instrument and the loss or gain on the hedged item will typically offset each other in P&L, thereby reducing volatility. Now, if you have done AFM, वहां पे आपने देखा होगा कि when you take a futures contract and then there is an underlying asset, so the loss on the underlying item is made up by the gain on the futures contract and vice versa. आपने interest rate futures में या forex futures में ये देखा होगा. Unfortunately, the details of that are not a part of our SBR syllabus, and given that our exam is 7 days away, we don't have time to spend on that. तो आप सिर्फ इतना याद रखो, if it is a fair value hedge, दोनों hedged item और hedging instrument का fair value change gets recorded in P&L, unless of course वो OCI वाला situation होगा तो. And it has to be offset in the P&L account. If there is a loss on the hedging instrument, there will typically be a gain on the hedged item and vice versa, because that is the relationship between the two. The reason you take a hedging instrument is कि hedged item का जितना value कम होगा उसका इतना value increase होगा and it will offset the loss. This you are investing in these instruments because वहां का price fluctuation you want to take care of by the usage of this particular derivative. Okay. In case of cash flow hedges, hedging instrument is remeasured to fair value at each reporting date. The portion of gain or loss that is an effective hedge is recognized in OCI and accumulated in the cash flow hedge reserve. The ineffective portion is recognized in P&L immediately. To understand what this means, give me a moment. I will take you to one more aspect of financial instruments in cash flow hedges. एक सेकंड. अभी ये करके भी 1 महीना हो गया. देखो, यू विल गेट ऑल दीज फ्लो चार्ट्स, डोंट वरी. ठीक है. कैश फ्लो हेज, hedged item and hedging instrument. Compare fair value of hedging instrument at inception is 0. Compare fair value of hedging instrument at inception versus fair value of hedging instrument at reporting date. Gain on hedging instrument is less than loss on hedged item. Change in fair value goes through OCI. Gain on the hedging instrument is greater than the loss on hedged item. Excess gain gets routed through P&L. So the gain or loss on hedging instrument, if it is less than the loss or gain on the hedged item, then it is recorded through OCI. If it is greater than the loss or gain on the hedged item, then the excess gain gets recorded through P&L. एक Example also I will show you, I will let you read. And what happens to the hedged item? The hedged item, if it results in a financial asset, the gain or loss gets recognized in OCI and then gets reclassified to P&L. If the hedged item results in a non-financial asset, then the gain or loss is recognized in OCI and it is added to the cost of the asset or liability. अब ये एक एग्जांपल देखो to understand how the cash flow hedge works. ठीक है, this is a documented cash flow hedge. By the reporting date, the loss in respect of the future cash flows amounted to 9100. It has been determined that the hedging relationship meets the effectiveness criteria. Explain the accounting treatment of the cash flow hedge if the fair value of the hedging instrument at the reporting date is 8500 or 10,000. ठीक है, अब आपका hedged item क्या है? The hedged item is cash flows relating to the recognized financial asset. आपका hedging instrument क्या है? The derivative instrument is your hedging instrument. अब what is the loss in the value of the hedged item? The loss in the value of hedged item is 9100. Okay, now what is the gain in the value of the hedging instrument? 8500. यहाँ पे क्या लिखा है? If the gain on the hedging instrument 8500 is less than or equal to loss on the hedged item. Loss on the hedged item is 9100. Gain on the hedging instrument is 8500. Value of hedged item fell by 9100. Hedging instrument increase हो गया by 8500. In this case, recognize the differential amount in other comprehensive income. जो आपका derivative instrument का जो भी चेंज करना है वैल्यू, recognize that through other comprehensive income. But if it is the other way around, यहाँ पे देखो केस 2 में the fair value of the hedging instrument increase to, गेन कितना हुआ? 10,000 का गेन हुआ एंड hedged आइटम का वैल्यू कितने से कम हुआ? 9,100 से कम हुआ. Come to this part of the flow chart. If the gain on hedging instrument, कितना है gain on hedging instrument? 10,000. If it is more than the loss on the hedged item, the excess gain gets routed through P&L. तो एंट्री क्या होगा? डेरिवेटिव इंस्ट्रूमेंट अकाउंट डेबिट 10,000 to other comprehensive income 9100 and the other difference gets recorded through P&L account. ठीक है, रूल याद करके जाओ एग्जाम में and you will get your marks. One last point that we should be revising is the modification of financial liabilities. This happens when there are substantial modifications to the terms and conditions of the financial liability. ठीक है, अब how do you understand whether there has been a substantial modification? आपको दो चीजें कंपेयर करनी है. कंपेयर द प्रेजेंट वैल्यू ऑफ कैश फ्लोज अंडर द न्यू अरेंजमेंट इंक्लूडिंग फीस discounted at the original effective interest rate versus present value of remaining cash flows under the original arrangement. If this difference is more than 10% of the original cash flows, the terms are deemed to be substantially different. Now, what does that mean? Let me give you a basic context. You had an old loan and you were facing some difficulties in the payment of that loan. You made the payment of one installment, but abhi aapko dikkat ja raha hai. So you approached the bank and you said, give us 1 year, give us 1 year relaxation from paying the interest and principal, and from the end of year 2, charge us interest and make us pay the principal once again. थोड़ा rate weight आप change कर दो. So you are making certain modifications to the terms and conditions of the loan. अब if the present value of cash flows under the old arrangement and present value of cash flows under the new arrangement, इनका आप difference निकालो. If this difference is more than 10% of the cash flows under the original arrangement, then you can say that the terms are deemed to be substantially different. And if the terms are substantially different, de-recognize the original liability, recognize the new liability, difference goes to P&L, fees incurred are transferred to P&L. ठीक है, if the amount is less than that, then if it is less than 10%, then it gets routed through then of course the liability is not de-recognized. You just record a change in fair value. You make a small modification to the liability. You don't de-recognize the liability. ठीक है, चलो. I'll need 5 minutes, guys. I'll be back in 5 minutes and then we'll resume with certain exam kit questions from the Kaplan kit or other kits where they have told a couple of financial instruments wala scenario and how to tackle that in the exam. So keep your exam kits ready. I'll be back in a moment. Okay. So this was actually a rapid revision, because class में how much time did we take? 10-12 घंटे तो we must have spent ना on financial instruments. मयंक उतना टाइम तो लगा ही होगा ना अपने को.
Yes, sir, easily.
हाँ, so अभी which is why this is called rapid revision. We don't get the time to dive into the finer nuances की why is the accounting treatment this way. But the point in our journey where we are standing right now, where our exam is literally 8 to 9 days away, at this point, you shouldn't spend अभी लॉजिक का टाइम इज ओवर अनफॉर्चुनेटली. अभी जो भी टाइम है वो व्हाट एंड हाउ का टाइम है. व्हाट टू डू एंड हाउ टू डू. वाई वाला टाइम वाज मे बी till 15-20 days ago. अभी you should focus exclusively on how are we tackling the situation and what to write in the paper. So, what I have done is I have looked at all the questions in the exam kit, and उसमें से I have picked up the questions on financial instruments, and वो हम डिस्कस करेंगे इन ब्रीफ. ठीक है. ये एक कंसोलिडेशन मतलब सेक्शन ए वाला क्वेश्चन है. ठीक है. जोई कंपनी करके है. आई एम ओनली लुकिंग एट द फाइनेंशियल इंस्ट्रूमेंट्स बिट विच इज फॉर 4 marks. ठीक है. जोई शेयर कैपिटल इज कंप्राइज्ड ऑफ ए क्लास शेयर्स. These shares have been correctly classified as equity. Joey is considering issuing the following instruments: B class shares that are not mandatorily redeemable but contain a call option allowing Joey to repurchase them. Dividends would be payable on the B shares if and only if dividends are paid on A shares. And then share options, which will give the counterparty right to buy a fixed number of ordinary shares for a fixed amount of 10 million. The directors of Joey require advice as to whether these financial instruments should be classified as debt or equity in accordance with IAS 32 Financial Instruments Presentation. You have two things with you. ठीक है. एक है क्लास बी शेयर्स एंड एक है आपके शेयर ऑप्शंस. नाउ इफ यू ऑब्जर्व क्लास बी शेयर्स, देयर इज अ वर्ड रिटन दैट देयर इज अ कॉल ऑप्शन. किसके पास है कॉल ऑप्शन? कॉल ऑप्शन इज विद जोई, एंड call option is an option to buy. So the company has an option to repurchase its own shares, and dividends are payable only if you pay dividend on equity instrument A. एक जो A कैटेगरी का शेयर है, if you pay dividend on that, only then you have to pay dividend on category B shares. Otherwise, there is no such obligation. Now the question is, how should you classify the category B shares? In this case, see, the call option gives the company the right or the option, but not the obligation to repurchase. That means, see, जहां पे obligation होता है वहां पे you have a compulsion. You don't have a choice. You have to fulfill the agreement. But here you have an option. If it is in your favor, you go for it. If not, you let the option lapse. The company has an obligation to repurchase the shares, which means it doesn't have a compulsion to do a particular activity. It has a choice to do a particular activity. Right है, compulsion नहीं है. So there is a discretionary element involved here. If you wish to do it, you do it, but there is no obligation to repurchase the shares. See, when you repurchase the shares, you will have to pay cash. Correct? When you are repurchasing the shares, you will have to pay cash. अब if it were a compulsion, ठीक है, अगर यहाँ पे ये वर्ड नहीं होता, company has a forward contract which obligates the company to repurchase the shares. अगर obligate to repurchase होता तो that means you will have to compulsorily buy back your own shares and pay cash. In this case, the company has a choice, it has an option. So not a compulsion, not an obligation to deliver cash to the other entity. And the dividends are paid only and only if they are paid for category A shares. तो डिविडेंड के केस में भी देयर इज नो कॉन्ट्रैक्चुअल ऑब्लिगेशन, बट इट इज अगेन डिस्क्रिशनरी. जहां पे ऑब्लिगेशन होता है दैट बिकम्स अ फाइनेंशियल लाइबिलिटी. जहां पे डिस्क्रिशन होता है, करना है तो करो वरना मत करो, दैट गेट्स क्लासिफाइड एज इक्विटी. यहां पे आई एम रिपीटिंग, had it been a future contract, फ्यूचर कॉन्ट्रैक्ट में चॉइस नहीं है, आपको कॉन्ट्रैक्ट को ऑनर करना ही पड़ेगा. In that situation, there would be an obligation to buy back the shares, which means there would have been an obligation to pay cash to the other entity. See, when you buy back, if I buy back my own shares from Mayank, I will buy the shares and I will give him cash. So obligation to repurchase means an obligation to pay the other party, जो यहाँ पे नहीं है, choice है, discretion है. Even in case of payment of dividend, there is discretion. So ये कैटेगरी बी शेयर्स जो है, these should be classified as इक्विटी इंस्ट्रूमेंट्स. ठीक है. एंड ये शेयर ऑप्शंस देखो, शेयर ऑप्शंस विच विल गिव द काउंटर पार्टी राइट टू बाय अ फिक्स्ड नंबर ऑफ ऑर्डिनरी शेयर्स फॉर अ फिक्स्ड अमाउंट ऑफ 10 million. नाउ how will this get classified? Any idea? Should it be a liability or should it be an equity instrument? Yes, Garvit. Just before you answer, if you are looking for financial liability, there has to be a contractual obligation to pay cash. आप पे compulsion होना चाहिए to pay cash to the other party. अब आंसर करो.
Sir, it should be classified as equity because here they mentioned that right to buy a fixed number of ordinary share.
Correct.
But in the financial liability, there is a classification last point as non-derivative contract where it is mentioned that the contractual asset should be a variable number of as equity
Very,
instrument trans.
very good. Very good. So fixed for fixed जब ट्रांसफर होता है that becomes an equity. अगर fixed for variable ट्रांसफर हुआ that becomes financial liability. इसका रीजन भी हमने डिस्कस किया था कि फिक्स्ड के केस में इक्विटी क्यों है, वेरिएबल के केस में फाइनेंशियल लाइबिलिटी क्यों है. ठीक है. यस हिमांशु.
Yeah, no, sir, I had the same answer. That here we know the residual interest in the company from this part itself, and you have fixed number.
ओके. अच्छा, ये सारा कुछ जो है ये आपको शीट में मिलेगा, बट शीट में ना मैंने सिर्फ सोल्यूशन डाल के दिया है एंड आई हैव गिवन कंपनी का नेम, सो यू विल बी एबल टू कोरिलेट इट. ठीक है. बट आई एम कीपिंग द एग्जाम किट ओपन बिकॉज क्वेश्चन का डिटेल तो आपको यहीं से मिलेगा, है ना. अब स्टेंट कंपनी करके क्वेश्चन है. हाँ, ये क्वेश्चन देखो. On 1st of October, the CEO and finance director each paid 2 million cash in exchange for preference shares from Stent, which provide cumulative dividend of 7% per annum. These preference shares can either be converted into a fixed number of ordinary shares in 2 years' time or redeemed at par on the same date at the choice of the holder. The finance director suggests to the accountant that preference shares should be classified as equity because the conversion is into a fixed number of ordinary shares on a fixed date and the conversion is certain. What is the question? The question is discuss appropriate accounting treatment for all issues identified above. अब यहाँ पे जो प्रेफरेंस शेयर्स है, सी IAS 32, IFRS 9, IFRS 7 का तो रेफरेंस बहुत कम आता है, बट इन दिस केस स्टेंट कंपनी इशूड प्रेफरेंस शेयर्स. उसमें क्या था, देयर वाज क्यूमुलेटिव डिविडेंड ऑफ 7%. ठीक है. व्हाट इज क्यूमुलेटिव डिविडेंड? इफ यू डोंट पे डिविडेंड इन अ पर्टिकुलर ईयर, इन द नेक्स्ट ईयर वो प्रेफरेंस शेयर्स पे लास्ट ईयर का डिविडेंड प्लस करंट ईयर का डिविडेंड चढ़ता है उस पे. ठीक है. देयर इज अ क्यूमुलेटिव डिविडेंड ऑफ 7%. There is option to convert it into a fixed number of equity shares in 2 years time or to redeem at par. And choice किसके पास है देखो तो. Who has the choice? Does the company have the choice or does the holder have a choice?
Holder has a choice.
Holder.
Holder has a choice. So ये preference shares जो है इसमें एक redemption element है and there is also a conversion element into equity shares. Ideally, these preference shares should be classified as what? These preference shares should be classified as a compound instrument. उसका आप equity element separate out करो, उसका financial liability element separate out करो. ये what are some of the indicative words in the question which point you in this direction? Conversion into a fixed number of ordinary shares in 2 years' time or redeemed at par on the same date. Huh? ऑप्शन दिया है आपको एट द चॉइस ऑफ द होल्डर. दिस इज लाइक अ क्लासिक केस ऑफ compound instrument and you know how to go about it. See, there are certain words given here which can be very confusing. Fixed number of ordinary shares on a fixed date. Fixed for fixed date के related नहीं होता है, ये आपको confuse करने के लिए दिया है. Fixed for fixed previous question में था, that is called fixed for fixed. In this case, date fix है उसका, that has got nothing to do with the classification of the instrument. ठीक है? Okay. Are you all with me?
Yes, sir.
Yes, sir.
Yes.
हाँ, मतलब थोड़ा अगर आप बीच में बोलेंगे तो मुझे भी बहुत अच्छा लगेगा. चलो, एक और क्वेश्चन आपको दिखाते हैं. ये हमने क्लास में किया है एक्चुअली, फर्नांडा कंपनी. सो हैव अ लुक एट दिस. On 1st of Jan 2007, as a result of a business combination, Fernanda Company has written put options to purchase the non-controlling interest shareholding in a newly acquired subsidiary, Randa Company. This means that Fernanda Company would be obliged to purchase the non-controlling interest shareholdings if the put options were exercised by NCI holders. Fernanda Company disclosed a contingent liability in consolidated financial statements. And then there is preference shares. In addition, in order to partly fund the purchase of subsidiary, on 1st of Jan 2007, Fernanda Company issued non-redeemable preference shares and recognized them as equity instrument in the consolidated financial statements. The preference shareholders receive an annual fixed cash dividend of 5% and a participating dividend which was 7% of the ordinary dividend. Fernanda Company stated that the instrument had characteristics of equity as it provided for participation in the future income of the company. Fernanda Company concluded that compliance with IAS 32 financial instruments would be so misleading that it would conflict the objective of financial statements preparation. Fernanda Company considers the classification of the preference shares to be equity rather than a compound instrument. सबसे पहले ये put option का बताना तो क्या होगा? हमने क्लास में किया है, which is why I am asking. See, company is not the buyer of put option. Company has written the put option, which means I am an 80% shareholder in the company and Garvit is a 20% shareholder in the company. Garvit को मैंने put option दिया है कि listen, 6 months from now, you have the option to sell the shares to me. So Garvit has an option after 6 months to sell the shares to me at a fixed price. If he decides to exercise the option, I have to fulfill. ठीक है, अगर गर्वित ने डिसाइड किया ही हैज द पुट ऑप्शन, ही इज द बायर ऑफ द पुट ऑप्शन, आई एम द राइटर ऑफ द पुट ऑप्शन. 6 महीने के बाद इफ गर्वित डिसाइड्स टू एक्सरसाइज द पुट ऑप्शन, व्हाट इज अ पुट ऑप्शन? इट इज एन ऑप्शन टू सेल. गर्वित ने डिसाइड किया कि मैं पुट ऑप्शन एक्सरसाइज करूंगा, आई विल सेल द शेयर्स टू सत्यमेव. इफ दैट हैपेंस देन आई डोंट हैव अ चॉइस, आई विल हैव टू बाय द शेयर्स फ्रॉम हिम. अगर गर्वित ने डिसाइड किया कि उसको शेयर्स बेचना है एंड ही डिसाइड्स टू ऑनर द कॉन्ट्रैक्ट, देन आई विल हैव टू, आई डोंट हैव अ चॉइस. ही हैज अ चॉइस, he has a right, but I don't have a right, I have an obligation. So put options in this case, they create an obligation to purchase the shares for cash, and that meets the definition of a financial liability under IAS 32. अगर गर्वित डिसाइड करता है कि उसको शेयर बेचना है, then I don't get a choice, I have a compulsion. That means there is an obligation to purchase that item from him, and when I purchase that item from him, I have to pay him cash, which means there is a contractual obligation to deliver cash regardless of the probability of that event happening, which is why these put options should not be classified as a contingent liability, but they are very clearly a financial liability. See, a financial liability it is a contractual liability, right? Contractual liability अलग होता है, statutory liability अलग होता है. यहाँ पे what does the liability represent? The obligation to deliver cash if the option is exercised. अगर गर्वित ने option exercise किया, अगर he decides to sell the shares to me, उसके पास option है, मेरे पास तो obligation है. दोनों के पास option नहीं होता है. Garvit, who is the holder of the put option, has an option to sell the shares to me. अगर उसने बोला सत्यमित मुझे बेचना है, then I don't have a choice. I have a compulsion, मुझे उससे खरीदना पड़ेगा, and I will have to deliver cash when the option is exercised. ठीक है? This contractual requirement cannot be avoided, and this exists because of a past event. ठीक है? सी अकाउंटिंग इज अ कॉम्प्लेक्स एक्टिविटी इन दिस केस. ठीक है, वो अकाउंटिंग हमारे सिलेबस में नहीं है ऐसे पुट ऑप्शन का अकाउंटिंग, बट द फैक्ट रिमेन्स दैट दिस पुट ऑप्शन represents a financial liability, not a contingent liability. Contingent liability अलग होता है, this is a financial liability for me. ठीक है? याद आया आप लोगों को what we discussed? I think last to last week डिस्कस हुआ था ना ये क्वेश्चन.
Yes, sir.
हाँ,
Yes.
त्रिशा याद आया?
यस सर.
याद आया ना कि भूल गए?
नहीं सर, याद आया, किया हुआ है.
हाँ. अब यही फर्नांडा का जो ये वाला पार्ट है ना, प्रेफरेंस शेयर वाला, इसमें व्हाट डू यू थिंक व्हाट शुड बी द क्लासिफिकेशन? इज इट इक्विटी, इज इट कंपाउंड इंस्ट्रूमेंट, इज इट डेट? क्या होना चाहिए?
Sir, compound instrument.
वाई?
Sir, it has a fixed cash obligation, like the dividend itself, that represents a financial liability component.
हम्म.
There are also rights to residual interest because of the participating dividend. So that's
Very good.
an equity component.
So you have summarized the whole question in 2 lines. Very well done. What Mayank is saying is, जहां पे fixed obligation है, that represents a liability. जहां पे discretion involved है, that represents equity. So this one preference share has certain features of a debt instrument also, has certain features of an equity instrument also. The participating dividend, basically the right to participate in a surplus, is a feature of equity, and the right to participate in, and the fixed right that you have to, or the fixed obligation that is there in order to pay interest at a certain fixed rate, pay dividend at a certain fixed rate, that represents financial liability. And ये जो आपका additional right है to participate in surplus of the company, that is the feature of an equity instrument. So Fernanda company should classify this as a compound instrument, and आपका जो approach है, that is very well received. सही बताया. अब there's a question called Greer company in the exam kit. That Greer company वाला question also has some part of financial instruments present. तो एक बार वो देख लेते हैं. लोन अग्रीमेंट है, दैट इज एन इंडिपेंडेंट पार्ट ऑफ द क्वेश्चन. वो ऐसे तो कंसोलिडेशन का क्वेश्चन है, बट इट इज अ independent subpart in that. Sorry, I'll take you to the question. गलती से ये खोला. ये देखो. Greer Company took out a 27 million bank loan on 1st of Jan 2006, repayable after 5 years. Interest is charged at 5% per annum, payable annually on 31 December. Transaction cost of 6,75,000 were paid on 1st of Jan. Effective interest rate calculated as 5.6%. Greer Company has negotiated a change to the terms of its loan agreement on 31st of December 2007 at no cost. This has resulted in the waiver of interest payment due on that date, with all other contractual cash flows remaining payable. The modification to the financial terms of the original loan is not considered substantive, and the present value is 26,841,000. When we revised the modification of debt today, what we said was calculate the present value of the new updated cash flows using the original rate, compare it with the original value of discounted cash flows, uska difference nikalo. If that difference is more than 10%, then the modification to the terms is substantive. फिर original financial liability को de-recognize and bring in the fresh liability in your books of accounts. In this case, they are already telling you that the original liability, the modification is not considered substantive. Because the modification is not considered substantive, in that case, आपको बस चेंज इन फेयर वैल्यू रिकॉर्ड करना है एंड दैट इज द ओनली एक्सपेक्टेशन फ्रॉम यू. दिस इज नॉट अ सब्सटैंटिव मॉडिफिकेशन. अगर सब्सटैंटिव मॉडिफिकेशन होता तो naturally that would have led to a completely different way of accounting. Original liability को de-recognize करना पड़ता and you would then have to recognize a fresh liability in books of accounts, the difference going to P&L. अब you will see that in certain questions, ऐसे तो that question has got nothing to do with financial instruments, but one part of it has been included, 3-4 marks worth, which again talks exclusively about financial instruments. जैसे ये कबेलो कंपनी वाला क्वेश्चन, I think we did this yesterday. Cabello Group has a number of financial instruments presented within its consolidated statement of financial position. Some group entities which had surplus cash resources had acquired debentures in other non-group entities to increase returns. Other group entities had raised finance by issuing bonds. Cabello Company financed the acquisition of Trudeau's by acquiring a loan. Cabello also had an overdrawn bank balance as at 31st of December. The overdrawn bank balance fluctuates regularly from an in-funds balance to an overdrawn balance. पूछा क्या है आपको? They have asked you how are these financial instruments accounted for in statement of cash flows. अब this is the question requirement. 6 marks. For what? For just describing how each of these items are accounted for. But pay attention. They have asked the accounting in consolidated statement of cash flow. हाँ, आप उसका accounting मत बताना. You have to tell how should it be shown in the consolidated statement of cash flows. अब debentures in non-group entities. When you invest money in debentures of non-group entities, it is cash outflow under investing activity. When you sell it off, it is cash inflow under investing activity. जो interest income है, that interest income will be inflow under investing activity. फिर a company has issued bonds, है ना, bonds issue किया है. अब bonds issue किया है, तो when you issue the bonds, that cash inflow is inflow under financing activity. When you repay the bonds, it is outflow under financing activity. जो interest paid है, interest paid on these bonds, IAS 7 gives you the choice, either show it under operating or show it under financing. That choice is there. Please mention that, you will get full credit. ऐसे आपको मतलब बैंक लोन फॉर एक्विजिशन, ओवरड्रॉन बैंक बैलेंस, वही आपको बताना है. जैसे ओवरड्रॉन बैंक बैलेंस जो है, दैट इज बेसिकली योर कैश एंड कैश इक्विवेलेंट्स. सो मतलब इट्स नॉट एज इफ इट्स लाइक अ वेरी टफ कैलकुलेशन और समथिंग ऑन द, कुछ इसमें मुश्किल नहीं है. दीज आर ऑल प्रेडिक्टेबल items and you should be able to tackle that effectively in the paper. ठीक है यार, फर्नांडा कंपनी का ना एक पार्ट शायद से मेरा रह गया डिस्कस करना. वेट, ये वाला पार्ट रह गया. On 31st of December, Fernanda Company sold its entire holding in a subsidiary, Interactive Company. Fernanda Company had loaned 3 million to Interactive Company and this remained outstanding after its sale. As a result, the loan to the former subsidiary was recorded in the consolidated financial statements at 31st of December 2007. Therefore, Fernanda Company presented the full amount of the loan as a cash outflow in investing activities in the consolidated statement of cash flows at that date, despite the fact that there had been no cash movement on the loan during the period. Investing activities showed a cash inflow of 2 million. This was made up of 10 million cash received as consideration for sale of subsidiary, less 8 million paid to acquire the shares in a newly acquired subsidiary, Runda Company. Cash and cash equivalents at the date of disposal were 3 million. They are asking you, uh, with respect to the statement of cash flows, discuss the issues with Fernanda Company's treatment of cash flows for the year ended 31st of December 2007. कंपनी ने क्या किया? कंपनी sold off its holding in a subsidiary company and company had given a loan to that particular subsidiary. पुराना subsidiary था, उसको लोन दिया था. And see, what happens is subsidiary is a part of the group. So when you consolidate the financial statements, the the intra-group cash flows, you basically try to eliminate. What is happening in this case is Fernanda Company had given a loan to the subsidiary and it was cash outflow under investing activity at that time when the loan was given. Now the loan still remains outstanding, but the subsidiary has been sold off. So now the financial statements have been disaggregated. Now consolidated financial statements where the subsidiary is not included at all. What should be the correct treatment? See, what Fernanda company has done is past में loan दिया था, आज subsidiary was sold off, तो now they are showing that particular amount as a loan. ठीक है. The loan to the former subsidiary was recorded in the consolidated statement of cash flow, consolidated financial statements at 31st of December 2007. Fernanda is presenting the full amount of loan as a cash flow in investing activities in the consolidated statement. See, इस loan already आप दे चुके हो, right? Right now, no cash transaction has taken place. The loan balance should appear in the individual balance sheet, but not in the cash flow statement. See, cash flow statement में only those items should appear which in which cash inflow or outflow has happened. आपने क्या किया? आपने लोन पहले ही दिया था. You had given the loan in the past and now you sold your investment in the subsidiary. आपने subsidiary में जो आपका investment था वो आपने sell off कर दिया. But अब उसके वजह से क्या हुआ? दिस लोन, सी when you prepare consolidated financial statements, consolidated balance sheet आप बनाते हो, loan given to subsidiary is an asset for you, loan taken from holding is a liability for subsidiary. When you consolidate the financial statements वो intercompany में eliminate हो जाता है. अब when you are not going to consolidate, फिर ये item आ जाएगा in the balance sheet. What they did was, because of this, they showed that particular 3 million as a loan, which is an incorrect financial treatment. It should appear in the balance sheet, but not in the consolidated cash flow statement. ठीक है. And subsidiary was disposed of. कितने में बेचा subsidiary? 10 million cash received as consideration, less 8 million paid to acquire the shares in a newly acquired subsidiary. They have netted it off. ठीक है. These are separate transactions. They should not be shown net. आपको 10 million का आउटफ्लो, सॉरी 10 million का इनफ्लो यू शुड शो सेपरेटली एंड 8 million का आउटफ्लो यू शुड present that separately. That should not be netted off because these are two separate transactions which must be presented as gross, not as net. ठीक है. Okay. Are you with me, all of you?
Yes, sir.
Yes, sir.
Yes, sir.
Okay. We have done Maple Company or what in class?
Yes, sir.
Yes, sir.
Okay. Who is Ashwa?
So that's me, Aishwarya.
Oh, मुझे लगा यार नया स्टूडेंट है कोई एंड क्लास कैसे देख लिया आपने.
तो मैं भी वही सोच रही थी ये ऐसे क्यों दिखा रहा है.
Okay, no problem. On 1st of Jan, Maple Company loaned a third party company 3 million. Maple Company is due to be repaid on 1st of May 2008. At 1st of Jan 2007, Maple Company issued preference shares and received 3 million. Maple Company is due to repay the preference shareholders 3 million on 1st of May 2008. No financial asset or liability was recognized. The directors justified this on the grounds that the proceeds from loan would be used to pay back the preference shareholders. I mean, if I were to say colloquial language, ये घर की खेती समझ के रखा है कुछ भी. Stupid accounting treatment these people are doing. You gave a loan to a third party and you issued preference shares. One financial asset, one financial liability. They are saying dono mat karo. These proceeds are going to be used to repay that particular amount. Dono mat dikhao books of accounts mein. This is not allowed as per the accounting standards. Offsetting कब permitted है financial asset, financial liability का? When there is a legally enforceable right to set off and there is an intention to settle the transaction on a net basis. यहाँ पे ऐसा ना कोई intention है, neither do you have a legally enforceable right to enter into such a transaction. So this type of transaction cannot be netted off. You should recognize a separate financial asset of 3 million and a separate financial liability with respect to the preference shares issued. Preference shares में financial liability होगा because there is an obligation to repay cash. ठीक है. अब all these stupid accounting treatments that these people are talking about, It makes no sense to have them because ऐसे थोड़ी चलता है यार, otherwise every entity will start accounting in the way it finds fit or it deems fit, correct? तो वो तो हम अलाउ नहीं कर सकते. चलो, there is one more question, Kimila. Kimimila company has extended loans to its key suppliers to help ensure their viability. Kimimila company has recognized these loans as financial assets. It holds loans of this type with the intention of collecting the contractual cash flows. Kimimila company and its suppliers have been affected by wildfires and flooding. In addition, there have been considerable policy and regulatory changes which have affected all parties. Significant uncertainty exists around the impact of climate change scenarios on Kimimila company and its suppliers' business model. What is the question? The question is, using Exhibit 2, discuss the impact of climate change on with respect to the financial assets. Now, यहाँ पे क्या हो रहा है? What is happening here? In this case, it has extended loans to certain key suppliers, and the business model is collect contractual cash flows. अब suppliers के साथ क्या हो गया? What happened with the suppliers? There were some fires and flooding and all of these things that happened, and there are regulatory changes, which means now the suppliers, it appears as if they are in a difficult financial position. They will not be able to either repay the full amount, or they might be in a position, where they won't be able to repay anything. So in this case, you should basically check whether the asset is impaired, credit impaired. You should calculate the expected credit loss based on the ability of the suppliers to repay. Maybe, probability ka impact consider karke you should get the expected value. You should do this for each supplier. You should incorporate the expected credit loss model, calculate the amount of expected credit loss, and make necessary disclosures. So, topics like climate change are tested in this way in the exam. ये वाला जो question है, it is again a classic case of how a question on financial instruments will effectively incorporate a question, or will effectively incorporate the topic of financial instruments. Now you should remember one thing, that when you are preparing, अभी आपके पास एक हफ्ता है, अभी you don't have a lot of time. What you should do is you should go through the notes, maybe my notes or any other notes that you are referring to, quickly revise this topic and look at the relevant questions. I have tried to, bring together as many questions as possible. आप इसको पढ़ो. Any doubts that you have, you can let me know. The recording will be uploaded on my YouTube channel. You can watch the recording. If you have any doubts, you can let me know. And see, because this is rapid revision, what happened in the course of the entire batch, naturally यार 12-15 घंटे का content, 2 hours is very difficult. I have tried to incorporate as many different topics as possible which are tested in the paper. 100% coverage थोड़ा naturally it's difficult. ठीक है? So was today's approach okay for you, where we discussed the concept first and then we went to relevant kit questions?
Yes,
Yes,
sir.
sir.
Yes, sir.
Yes,
So we can continue that for the remaining lectures.
Yes, sir.
Absolutely, sir.
yes, sir.
Definitely.
And what have I told for tomorrow? मैंने क्या बोला है कल के लिए, मुझे भी याद नहीं आ रहा है.
Sir, IFRS 19 and one more topic.
IFRS 19 is not so important.
Sir, IS 19 and IFRS.
हाँ, एम्प्लॉय बेनिफिट्स एंड शेयर बेस्ड पेमेंट्स, तो कल वो करेंगे. नॉट टू मेनी क्वेश्चंस आर आस्क्ड फ्रॉम शेयर बेस्ड पेमेंट्स. एक या दो ही क्वेश्चन है एग्जाम किट में, तो वी विल टैकल ऑल ऑफ दोस टुमारो एंड देन वन बाय वन. ठीक है, चलो, थैंक यू सो मच फॉर योर टाइम.